You're a cute little ducky in a cup, aren't you? You're so cute. All right, look at this, baby dolls. Macro's looking pretty good. I know crypto's literally gone to zero. Here's zero. We went below zero. We're down below zero. But macro's looking pretty good. Macro, referring to macroeconomics, the macroeconomic environment of interest rates, the US Fed, and everything. I mean, I'm just going to have to tell you that straight. It's looking pretty good. And why I'm bullish on it is because everybody is ignoring it in crypto. No one's talking about it. If you recall, in 2022, you couldn't go a day without everybody talking about the Fed and the CPI and the fake jobs, which was fake jobs. I've shown you how the government's lying to us. They prop up the numbers. It's all one big baloney scam, friends. We're all in this together. But you're a cute little ducky and you want to know why is macro good. Honestly, just go back to sleep. If you can't take this, friends, I understand it. Just don't share this with anybody else. This roller coaster is not for everybody. The destination's pretty good, but the journey, not everyone can take it. But macro's turned a tide, right? What do I mean by that? Well, look at this. CPI is next week. CPI is coming up really close. Right? It's in a couple of days. And you'll notice that right after CPI is the US Federal Reserve meets for its FOMC. I call it the FOMC. It's also known as the FOMC. It's the meeting, right? Where a lot of these old people meet around and they go, hey, let's do the voting on interest rates, where they don't really vote. It's really predetermined from years ago. Okay, so it's one big giant scam, right? So the Cleveland Clucks, it's the Cleveland Fed, all right? The Cleveland Fed. So it's one of the Federal Reserve, the state boards, the banks, whatever it is. They have a very good, accurate inflation forecast. And they've got theirs going below 4.30% for the month, right? Which is a 12-month backwards reading, which is pretty good. Now, when I say this, right, my next line here, I'm telling you that the interest rate is 5.25%. So this is something to keep on board, okay? So traditionally, we all know when there's the CPI, okay, CPI, whatever the rate is, to get it down, they have to get the interest rate. See, this is the interest rate. They have to keep it above the inflation rate, all right? So that's what's been happening while hiking. But now, I'm going to change it back to show you. Well, now what's happening is the inflation rate's been going down. Remember, up here was like 9%, okay? Now we're down back to like 4 point. It would be great, even if we get like 4.5, right? But remember, the US interest rate is 5.25. So if it's 5.25, we are still in a premium zone, a juicy premium. You see all this gap here? That's great. That is the tightening. I mean, I'm saying it's great, but not really. It's everybody getting choked out in the economy. Nobody can spend. And you can feel it. No one's buying crypto. No one's doing handstands anymore. No one even wants to buy bubble gum. You're not even buying bubble gum. What's going on, friends? So when you're looking at this from a bigger perspective, you're going to have to think about, hey, what happens next? Is the market going to appreciate the recession coming, or is it going to have a hissy fit? We don't know the full answer yet, but I'll tell you right now, this tightening is working. It's working, okay? Because what did we hear a year ago from all the doomers? A lot of the doomers were saying the inflation rate cannot come down. It will not come down below 9%. That's what they were all saying. You recall it. Peter Schiff, everybody's saying the inflation rate won't come down. It's never going to come down. It's going to keep going and going and going. And look what's happened, man. I tell you, they fudge the numbers. They do some dodgy stuff. Their backwards inflation rate is coming down. All right, so this tightening effect is good. I'm going to show you now a website. It's called the CME Fed Watch. So I think if you go to Google, type in CME Fed Watch, right? So you just type in this is CME, and then you just write Fed Watch tool. But you can see it up here, right? You can see Fed Watch tool. Just the first result will show you this, and it will just bring you to the first page. You'll be able to see the interest rate expectations. So this is the next two moves. So you notice there's a probability here. See how it says 70%? This is 70%. But if you look down here, and please confirm our friendship if you are looking right now and if your eyes are open, you see this 500 to 525? That is the current interest rate right now. So you can now see, okay, they're going to hold with a 70% chance. That's what it says, okay? And if you want to know a quick way, you have your eyes look up here. See the top right probabilities? Okay, no change, 70%. And a hike, taking a hike up the mountain, is 30%. It's funny. Somebody was very angry. I forgot which person. Someone was very angry because the market, for some reason, priced in a hike right, for this next meeting. This was like a month ago, and now it's flipped already. So they're pricing in higher chance of a hike, and everybody's like, things are going to go bad, and now they've gone back to a hold. So it's just, see how these things can change, man. It's big money moving around. There's a lot of insiders and scammers. They're all trying to scam each other. So you have a 70% chance of a rate hold. You think, okay, well, all right, they're going to hold rates. It's not a cut, but that's a good thing. If you've been watching my videos, you've been remaining a friend and remaining a cute little duck in a cup, then you'll know that a hold is actually when markets pump, because markets are forward-looking. Markets are smart. And you'll be able to see this in my chart. So I'm going to show you now. You're going to have a look at here. What happens is, you know what? I can actually show you what happened in the last cycle. Most people don't know this, right? Do you know they held rates here? Did you know this? This is Bitcoin in the previous bear market, right? They held rates probably like end of 2018, 2019. They actually held rates. Guess when they started to cut rates? Guess up here. Isn't that crazy? So they held rates and then bang, we went up. We priced it in. Now I know this is crypto. So let's actually go in for a zoom in. It's fascinating how this works. Everybody's trying to scam each other. So you have the circle here, right? Or draw a big arrow. You'll see this is where they held rates. They're like, that's it. No more rate hikes. We are holding, because the S&P 500 had crashed. And then when they officially said, okay, well, we're going to see how things go. Bang, we went up. Now, what's everybody's going to say? Everybody's going to say that this rally in Bitcoin was only because of the plus token Ponzi. Yes, they will say that. And I will tell you, forget the news. The chart and evidence will tell you everything. If you always focus on the news, you will never get anywhere, because there's always going to be another reason. It's like you're talking to a drug addict and you say, why did you take drugs again? And they'll say, oh, no, my friend came over. You go, all right. And then you ask them next week, okay, why did you take even more aggressive drugs? They go, oh, man, I was bored. Okay, and then you ask them the third week, why did you take drugs again? You go, I don't know, it was a Wednesday and I wanted entertainment, but I was hungry at the same time. Do you see what I mean? It's like, it's a new reason every time. It's a new reason. Doesn't matter. They are still on illicit substances. That's why I'm telling you, doesn't matter that the news was, plus token Ponzi, or some coins going to zero, or SEC, Garbage Gensler, he went full tilt on his OnlyFans as well. He got a new tattoo on his bum cheek. Does it really matter what the news is? No, it doesn't matter. Now, we're here every day, we're absorbing it. So yes, we can feel it. I know it matters by emotion. We can actually feel the damage, right? It's like squeezing our nuts. I understand the pain, but the chart doesn't care. Prices don't care. This is humans and how we abstract them and give value to assets. This is the collective mindset of everybody scamming and insidering and long-term holding and money printing. All of that gets factored into the price. It's a beautiful mechanism. It just balances everything out. So this is the funny, fascinating thing. So yes, when we rallied up, this was pricing in the cuts. This was pricing them in. So when they actually said, all right, I might have to start cutting now, look what starts happening. We start going down. And then this was like, all right, zombie virus, go to zero. But here, it's fascinating. So this was the most part. So you might say to me, look, we're not going to get a rally like this, I think. Well, it's too late now, right, for us to continue the actual rally. But look at the hold part. So if you had a strategy of, all right, when the Fed decides to hold, I go all in. And then when they start to cut, I start to go out. Well, statistically, historically, it's the same thing every time. So this is fascinating to see that this happened in society time and time again, and we can see it, and nothing we can do to stop it. So what would this represent if this happened again? Well, if they actually hold rates at this next meeting, it's going to be like here, man, in June. Like, I don't know, baby dolls. Maybe we see just like a woohoo. And but now, okay, now here's the gamble though. Now, and you don't need to panic with this, but when do they start cutting? This is the question. And this is, I promise you, you're going to have an appreciation for this. When they start cutting, most likely they are cutting because the economy is slowing down too fast and they can see doom and destruction on the horizon. This is what happens, right? So when they hold, it's the up part. When they cut, it's the down part. Now, when we continue, you have to have an appreciation for this. When they cut, most likely, I'm telling you, it's not going to be easy for me and you because the inflation is still high. the inflation is like 4 point something percent. What is it up here? It's still 4. Yeah, see it? It's 4.13 is expected for the next one, right? It's 4.13. So I'm going to show you the inflation, friends. Draw it here. You know, it was like 9 last year. Now it's coming down, down, down. Right now it's back down to 4. Now, if we're looking at the inflation and we have their interest rate, which is above it, so we have the rate is like down here now, right? This is where like 5.25% is. Imagine it in your mind. What's going to happen is people are going to tell you and me that, oh, inflation's gone down to 3%. That's eventually going to happen. Here's the interesting part. Will the Fed cut rates and convince you and me that the economy's fine? Because they are going to cut rates. They're going to have to lower the rate. The inflation's going to go down. They can't keep the interest rate at 5% when the inflation's down to like 3%, right? So I'm trying to look out 6 months into the future. So I'm trying to look out here towards like October, December, maybe March next year with the Bitcoin halvening, somewhere in this zone, just guessing. When do they start cutting rates? And are they going to tell me and you that, no, the economy's fine. It's just that inflation went down. Because I'm telling you, how the crowd reacts to this will be everything. And I do mean everything. If the crowd believes them, then I'm sorry, we're gonna have to, I don't like doing this, we're gonna have to trade out parts of our portfolio because this is like such an obvious, clear thing. Now, how much would I get out? I mean, you can throw a number, whatever number you want. If you don't like the idea at all, you can even do 5%, 10%. If you want to be super aggressive, get out like 20 to 33% and you just leave it on the sides, ready to buy in, and that's it. Because what's going to happen is they're going to cut rates. So this green line, remember, is going to be them cutting rates. And remember, I've just told you, when they cut rates, it's always because the economy is about to crash later on. But what they're probably going to tell us this time is, no, this has nothing to do with the economy. Inflation has come down. We've won. So this is where it's going to be really hard, friends. If you are a cute little duck in a cup and here you are chilling, you're going to be fine. You don't need to think about this. But man, we're going to have to really think about what price would we be enticed to slice off our portfolio if this happens. This is the crazy thing that we're just going to have to go through. Now, what I'm going to do, I'm going to clean this up a bit. I'm just going to show you a scenario here because this is a golden box of friendship here. And I'm just telling you, here's the thing, okay? This golden box, this is the highest volume node for Bitcoin. I think I have it here, the visible range. Maybe we can see you're a baby doll. So you can go to a visible range. Okay, it's all right. I'll get another chart. But this is where the highest volume point is. See this rectangle? It's $37,000 for Bitcoin in this whole range. You're curious? So the one for down here was like 20,000 or something, but the one up here is about 37,000. So this is a magnet. And yes, you're probably going to wonder, there should be a magnet emoji. Yes, there is. Here we go. There is a magnet emoji. What does this mean? It means we're going back there. But also, how these magnets react is, if we go up to this magnet and we stay here, I'm just letting you know, I'm not getting anything out. Personally, 37,000 is like a fair value for me because we're trying to play. This is like a 6-month or 12-month type of time frame. So if we get there, I don't want to get out. But if we get there and then let's say the market goes up more because it's like, oh, they're going to cut rates soon. And then they cut rates and we're actually like at 48 to 55,000 Bitcoin. You know, it could be next year. Then I'm personally going to say, all right, well, historically, whenever they cut rates, things slow down too much. And do you remember this 37,000 magnet? I think we go back down there at some point. S&P rolls over, could take 3 to 6 months. So that's why it's going to be tough. You have to decide how much are you willing to leave on the sidelines and just sit there and do nothing with it. Because those altcoins that we want to buy, we want to rebuy, you know, want to get Hex, Chainlink, whatever, everything you want to get, it will have to get deployed and get them in, but only when things get dire. So this is, I know this might sound a bit crazy, but hey, it's not really. It's because the market has made us too happy here. Look at this zone. This is big fat premium zone. It doesn't have to do this. Like I can just rewind time. It is possible that we just go to the magnet zone and then if they cut rates and we jitter a bit, we come back down to 30K and then we continue up. See, that's not really anything you can play here. This is such a small move. So this move here, 37 to 30, that's nothing, man. 20, 30%. Are you going to really risk it? It's not worth it. What if it like fakes you out, comes back down? It's not worth it. So in this scenario, I want premium. I want a big move. I don't even know if we're going to get it. So you can even go back to Bitcoin in the early days, and you can see, right, here's the Mt. Gox Ponzi scenario. What happened? See this golden box of friendship? Yeah, I mean, this is the Bitcoin halvening run. It'd be kind of cool if it all lined up, but you don't even have much time, right? You don't even have much time. You're not going to be able to sell the top here. So maybe, let's say you sell here. This is the 20% drop. Is it really worth it? Maybe. It depends on the altcoins we're in, because this is Bitcoin dropping 20%. You know, if Big Daddy Bitcoin drops 20%, I don't know, maybe that represents a 40% correction for Hex and Chainlink, you know, from higher prices. For example, Hex could be 20 cents and then it drops back down to 12 cents. Chainlink could be $20 and it drops back down to $12, okay? So that's the type of move I'm talking about here. So this is why, I mean, no one's talking about this, and that's great. That's why this video is about macro is looking good. They're going to hold rates. Statistically, historically, when they hold rates, the market's smart. The market says, everybody says collectively, they go, oh, if they are holding rates now, that means the next move is going to be a cut. Most likely, because inflation's going down. So they go, let's price in the cut now. That's what they do. And of course, we're sitting here, we're wondering, we're twiddling our thumbs. Yes, we are. Little ducks in a cup sleeping. We're just thinking, hey, is the cut pricing, is it going to be huge for Bitcoin or mild? And if it's mild, we're not doing anything. If it goes to the magnet zone, I'm not doing anything personally. But if it goes to a friendship premium, well, we might have to do something about that. And hey, you know, you're not going to be playing with too much, but it's something to just think about. You know, if everyone gets too excited, we know this. So I want you to know too, Bitcoin always has a premature volcanic eruption in the Bitcoin halvening year. You know, there's a bit of like, oh, this was a zombie virus, but forget that, right? So there was a premature here. There was a bit of premature here. You know, it has these little bursts of like, we're coming back, but not fully, right? They are really good buy the dip opportunities. So it's just nice now that we're part of this here, and I remember living through it. It's nice to know that we can participate in that. Hopefully, our altcoins that we're in are going to have insane volatility. So if Bitcoin does these like 20% drops or 30%, maybe our altcoins get thrashed during that time. So we'll be ready, okay? But none of this is valid unless we get given a good premium. Because if Bitcoin wants to do this like, let's come back down here and then do nothing and then kind of like walk its way up here, this is nothing. This is still a random burst, random walk to us, all right? So this US CPI is dropping. It is dropping. And as I reiterate to you, if we get a lower CPI, we're going to get that higher rate hold. And you've seen it right now. It's 70%. No one's talking about it. Everyone's like, crypto's dead. Securities. Gary Gensler. Why don't I look at your OnlyFans? All these things are the walls are closing in on everyone. But hey, macro looks pretty good. So at the end of the day, we're still going to make it. Let's look for a brighter future. We're going to see how the next 90 days go. And we're going to be waiting and seeing if the Fed holds rates, how's the market going to react? And what the stock market does after that. Like, subscribe, bell button, and all. Tell mum and dad that, yes, you are a cute little sneaky duck in a cup. Take it easy, friends.